Good morning, everyone, and welcome to the Axis Securities Morning Podcast. Today is Wednesday, 11th December, and the time is 7 a.m. US equities fell for a second straight day as investors awaited inflation data to gauge the next set of clues on monetary policy. The S&P 500 finished 0.3% down, while the Nasdaq 100 fell 0.4%. The November CPI number due later today will be the final major economic release before the Fed meets next week. Talking movers, Treasury yields rose along with the dollar and gold, with the yellow metal rising for the third straight day and benefiting from expectations that inflation data will come in soft. NYMEX crude was steady under $70 as traders awaited a monthly report from OPEC expected to provide a market snapshot. Back home, the rupee slumped to yet another record as it sank to 84.86, with the new RBI governor seen as someone who'd follow a dovish path. The central bank is slated to cut rates as early as February, with some analysts betting on an off-cycle reduction if incoming data comes in soft. Meanwhile, the options implied odds of the rupee touching 85 before year-end have risen to 86% from 75% at the start of December. The Nifty had a volatile outing as an initial attempt to climb was met with selling post-noon that saw the index end in the red for the third straight day. The market recovered nearly 100 points from the session lows though, tracing a candle with a long lower shadow that showed the presence of demand in the 24,500 area, a support level that was formerly resistance. 8 of the 12 sectors finished higher, with realty rising the most at 1.4% and media slipping 0.7%. Breadth was negative for a third successive day, with 2 stocks gaining for every 3 that fell. Shriram Finance was the biggest gainer at 2.6%, while Bharti Airtel fell the most at 1.5%. Technical resistance sits between 24,800 to 25,000. While support remains anchored in the 24,360 to 24,445 area. Talking flows, foreigners invested around 600 crores on Monday as per CDSL data. That takes the inflow number to 25,600 crores on a month-to-date basis. Moving to derivatives, the Nifty's PCR fell from 0.9 to 0.86, while the bank Nifty's went from 0.98 to 1.02. More than 2 calls were added for every put outstanding and implied volatility rose, which meant market participants were positioned for a coming advance. The FII index futures long-short ratio went from 0.81 to 0.77. Looking at options concentration for the weekly contract expiring tomorrow, the range to watch remains 24,500 to 24,700, with extended resistance at 25,000. Looking ahead, the GIFT Nifty was up 20 points. Asian equities were mixed with big moves missing. Talking stocks, Alok Industries, Adani Ports and JB Chemicals were at horizontal resistance. Alchem Labs and Syngene were at trendline support, while Bata India, Steel Authority of India and Trident were at trendline resistance. Coming to key moving averages, 51%, 49% and 63% of NSE 500 members were trading above their 50-day, 100-day and 200-day moving averages respectively. CPI data is slated to be released from the US today. That's a wrap on today's podcast. Thanks for your time and have a good Wednesday.